So there's a lot going on last week, but financial market attention primarily on the Fed's policy shift with regards to inflation, allowing it to overshoot that previous 2% target. One Fed member mentioning a 2.25 to 2.5% range, also allowing for rates to remain lower even if the unemployment rate comes back down, absent a surge in inflation. Net result in the financial markets, US dollar in a retreat, US equities making fresh highs. And when it comes to fiscal stimulus, so far, there hasn't been an agreement. Both sides hinting at ceding some ground, but very, very far from the middle. On the geopolitical front, tensions haven't subsided between the US and China, nor in the Mediterranean. In this case, the potential of sanctions being introduced next month when the EU meets. We did have the Japanese Prime Minister resigning over poor health. We do have coronavirus cases topping 25 million, record rise in India. And when it comes to the stock market, we got both Apple and Tesla trading at lower prices this morning following their respective stock splits. Well, we got a Dow revamp, in this case, Salesforce replacing ExxonMobil, Amgen replacing Pfizer, Honeywell replacing Raytheon. And in oil news, we did get, there were a couple new findings in Saudi Arabia, while in the Gulf of Mexico, they're ready to go back online following Hurricane Laura. So this morning, we did get Chinese PMIs out of CFLP for both manufacturing and services, both of them above 50, services beating expectations. We are going to get preliminary CPI figures for Germany throughout the day. We're also going to get preliminary CPI figures for the Eurozone tomorrow, as well as unemployment data for the bloc. It's manufacturing powerhouse Germany and Japan. Now, we are going to get a string of manufacturing PMIs, and in this case, from a number of sources. We got it out of Caixin for China, we're getting out of market for both the Eurozone and UK, and out of both market and ISM when it comes to the US. But the Australian dollar could be in for a bit of volatility, and that's because the Reserve Bank of Australia is set to announce its monetary policy, its key rate expected to remain unchanged. What about Wednesday? It's the usual EIA oil inventories estimate. In this case, last time around, showing another significant drawdown. And when it comes to the US, we've got factory orders as well as ADP's non-farm estimate. On Thursday, well, it's a string of services PMIs this time around, and expectations are for mostly above 50, signifying expansion or improvement on the previous month. And we're also going to get the usual Thursday unemployment claims out of the US, last time around failing to drop below 1 million. But when it comes to US employment, the real focus is going to be on Friday, and that's because we get the big one. US Non-Farm Payrolls expectations are for another significant increase and for the unemployment rate to drop into the single digits.